This is the AI News Flash for May 6, 2 p.m. UTC. First up, Samsung Electronics has crossed a $1 trillion market capitalization for the first time in its history. According to Yahoo Finance, surging demand for AI memory, especially HBM4 and advanced DRAM, is the driving force behind this symbolic milestone, alongside record highs on the KOSP index. Samsung's competition with SK Hynix for HBM4 supply to NVIDIA's next-generation Rubin GPUs is intensifying, and Samsung Foundry is also gaining momentum with reported wins on NVIDIA Blackwell Ultra production orders. With the four major hyperscalers spending $725 billion in CapEx during 2026, the market is fully pricing in an AI memory supercycle. Following Apple, Microsoft, NVIDIA, Amazon, and Alphabet, the emergence of the first Asian company to surpass $1 trillion marks a structural turning point that confirms Asia's dominance in the AI semiconductor ecosystem. Next, the AI boom is fueling a surge in U.S. construction hiring, according to the latest jobs data. The Los Angeles Times reports that construction was a top sector for job gains in the April employment report, with the data center building rush identified as the direct driver. Hyperscalers are spending $725 billion in 2026 CapEx, and massive labor demand is being generated across data center site preparation, construction, and power infrastructure. Electricians, plumbers, heavy equipment operators, and transmission line workers are in tight supply nationwide. As fears of AI-driven white-collar job losses spread, blue-collar AI infrastructure construction jobs are now propping up the labor market. This bifurcation matches surveys showing 60% of Gen Z prefer skilled trades, marking a clear restructuring of the workforce in the AI era. Third up, the Federal Reserve Bank of Atlanta has published independent survey results on corporate AI spending and headcount impacts. According to the latest Macroblog analysis, the vast majority of surveyed firms plan substantial increases in AI spending over the next year. But AI-driven headcount reductions are limited, with productivity gains and task reassignment being the dominant outlook. This stands in contrast to dire forecasts from Goldman Sachs estimating 300 million jobs at risk globally and McKinsey's 2030 projections. Real economy data shows limited evidence of mass replacement, with complementary AI usage remaining the mainstream pattern at this point. Alongside Federal Reserve Governor Cook's remarks on the limits of monetary policy in addressing AI unemployment, and Norway's sovereign wealth fund warning about AI layoff backlash. This is a notable data point showing that central banks are now actively monitoring AI's labor market impact. Finally, Morgan Lewis law firm has published a detailed analysis of the formal decision by Chinese authorities to block Meta's $2 billion acquisition of AI agent company Manus in China's first AI national security review. On April 27th, China's National Development and Reform Commission designated Manus as a strategic Chinese AI asset and blocked the deal, despite the founder being Chinese national and the company having relocated its headquarters to Singapore. This exposed the limits of the Singapore washing strategy. This sends a powerful signal to the structural trend of Chinese AI startup founders relocating overseas to escape Chinese regulation. Experts warn it will have a chilling effect on cross-border AI investment overall, amid the US-China battle for AI tech supremacy. Going forward, due diligence by US and European VCs investing in Chinese-founded AI startups will require mandatory China regulatory risk assessment. This precedent-setting ruling will have long-term implications for Meta's overall AI acquisition strategy and the global expansion structure of Chinese AI talent. That's all for this AI News Flash.